Welcome back. We hear it all the time. Is there now another tech bubble? Venture capitalists and private investors pouring cash, looking for that next big Uber or into Uber itself. Joining us now is Cheryl Cheng. She's a partner at Blue Run Ventures with perhaps a better perspective than most of us can get on just how overvalued, in some cases, these private companies are. Do you have concerns?
So at Blue Run, we invest in early stage. So we're usually first institutional money in, which means that our valuations are relatively controlled versus what you might be seeing or what you've been talking about in sort of later stage rounds. So at our level, we're not that concerned, but we're definitely seeing it being a very good time to be working in tech. And you're seeing that from different perspectives. So it depends on, I guess, which side of the table you're sitting on.
What are a few examples of the companies you've made investments in?
So we were very early investors in a company called Waze, which was an application for your mobile device that allowed you to look at real-time traffic. You love it.
I love it.
Great.
I love it. It gets me everywhere.
Now owned by Google.
It is now owned by Google. You don't have it.
I don't have it on my.
It's life-saving.
You need to get it.
Yes, you need to get it.
And really the insight there was that maps have existed for a long time. So if you just need to get to know how to get from point A to point B, you know how to do that. But if you need to know the traffic and what's happening, the roads are alive. And Waze helps you do that. And a lot of that was around how do you compute in real time where people are and what the traffic was.
And so that was a great investment, obviously,
yeah,
especially with the sale to Google. But when you look at the landscape today, where are you guys still finding value? And how much money is chasing some of these startup names that everybody from Mark Cuban to others have said, you know, these ideas are just, they're not going anywhere, and there's not going to be any liquidity in these names, and we don't really know anything about their financials. At least last time they were public companies. This time around, they're still mostly private.
So whether they're private or public, that's one separate issue. What we really look for is industries that can be disrupted with technology at scale. So one area that we're looking at is financial services. So in the last financial crash, you saw that a lot of banks pulled back. They weren't doing small business lending. A lot of small businesses didn't have access to capital. So out of that came a company called Cabbage, which we're an early investor in, and they look at a lot of different metrics for a small business owner. One of those metrics actually being social metrics.
Wow.
So I know you guys talked a lot about Etsy today. So if you're an Etsy business owner, you're actually running a small business. Even though it's not a brick and mortar business, it's still a small business. So how do you take your Etsy reviews and use them to translate into your ability to get credit? So Cabbage will look at all of those social metrics and say, you as a small business owner should be extended credit, and they provide a lending platform for these small businesses that a lot of traditional banks are pulling away from.
So in other words, it's sound business, sound attractive, sound valuation.
Exactly.
Right.
But how do you think about, so for instance, in financial services, there's a lot of regulations, heavily regulated industry. Cabbage, your average loan is about 40% on an annualized basis, which I know is not necessarily the most fair, but it's a very high interest rate. And these are people who can't always get loans in other places. But as you start to get bigger and you start to grow, you're going to get more regulatory scrutiny. And the CFPB has been really focused on payday lending and really high interest rates. And, you know, how do you factor that into an investment thesis?
Well, so we let the market kind of dictate, and, you know, the market grows and it changes. And Cabbage is very transparent. All of these companies are very transparent. There's no hidden fees, or they're not forcing you to take money. Small businesses have no other options because of macroeconomic conditions that have sort of pushed them into this position. So Cabbage is taking a very community-based approach, and each company is going to be a little bit different. So in Cabbage's case, which I'm most familiar with, they take a very, we're here as your partner, right? And so everything from their marketing collateral to their community to kind of the tips that they give you as a small business owner, it's really around helping you build your business. The money is just one piece of it.
Yeah.
So Cabbage has started moving into debit cards that a small business owner can use. So when they take a client out, there's a way for them to actually pay. And that money is being debited off of an account that they have taken a loan on. And so it's kind of giving you kind of a 360-degree platform for small businesses to build their business.
It sounds fantastic, but at what point, Cheryl, do you guys look at the environment and say, we can't justify paying these prices anymore, or there is too much money and not the right kind of money chasing some of these investments? Do you have any of those concerns right now as things stand?
So as venture capital as an asset class, probably there are some of those macro concerns. From Blue Run's perspective, we're not that concerned because we're early stage. Right. So that's sort of the key. It's like, if you're in venture capital, what's your strategy within that whole asset class? We invest in a company when they're sometimes 3 guys and a dog in a garage, you know, like it's an early idea. And so at that stage, you can put a small amount of money to work, see how it does, and then invest more later.
Right. So, for instance, if Cabbage came to you today, or Waves came to you today, or one of your other investments, you may in fact not invest in it because it's too far down the line.
Or we look at it as a discounted cash flow. You look at it as an ongoing concern business that has to show that it can stand as a business on its own, the way you would look at any other business.
Versus your current style.
Yes.
Right. Cheryl, thank you so much for being here.
Thank you.
Giving us a window and some interesting research now to do as well for a lot of people out there watching. Cheryl Cheng from Blue Run this afternoon.